Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, May 19th. Before I get too far along, this has the potential to be a longer video. I want to go over a lot of stuff. So don't forget, in your video player, you can run at 1.25 or 1.5x even to cut the runtime. And then if there's a particular portion where you want to take some notes or adjust your charts, you can of course pause the video and then resume, so you can cut the runtime down. So okay, we've had some overnight selling. Large caps down 0.8%, NASDAQ down 1.35%, small caps down 1.4%. Precious metals, silver down 2%, gold 0.5%, and copper down 2%. On the economic front today, really the biggest thing is the FOMC minutes at 2 p.m. Those haven't amounted to much in recent months, but there's always the potential because because of all the inflation fears and stuff like that. It might be interesting to see or hear what some of the members had to say. And the thing is also, don't forget that those notes are sterilized, the minutes. It's not like everything they say. So those things are scrubbed. And if there are dissenting views, they might be sterilized to the extent that, it makes the committee look like, oh yeah, they're all on the same page. Everybody's unanimous. So, we'll just see if that amounts to anything this afternoon. Wanted to make a couple comments about the action yesterday. All the junk stocks, the bubble stocks, the EVs, the green transformation, all those stocks got healthy bounces yesterday, but I think they're just an oversold situation. They have been beaten up quite a bit, and they got those bounces, and dramatic. If you caught one of them, great. But I didn't touch any of that stuff. I think it's a real choppy environment out there, and as far as true swing trading, I think those are really tough names right now to try to jump in and it's gone too far, that kind of thing. I think really continue to stay the course. I think the tailwinds are behind commodities, financials, energy, those kind of things. So, and stay away from, the software, the high valuation names that don't have any earnings, that kind of stuff. I think this is and will be a continued brutal environment for those types of names. So also, I think it was noteworthy, Home Depot and Walmart blew it out of the water yesterday on earnings and then traded down. Good news, bad reaction. That's not what you really want to see. And I think we've got Lowe's this morning. That one will be interesting, of course, with all the selling. It's probably not going to do anything, probably trade down. But so what I'm going to do this morning is go through Bitcoin, go through some trade setups and observations that I have, and then we'll get into the indexes and FATMAAN names. So here's the grayscale Bitcoin Trust. Of course, we had the massive ramp in Bitcoin at the end of last year, and this year kind of flat trading, choppy trading, and now it's taken a leg down and is testing the 200-day moving average. What I want you to take note of is the big void below. There was a 2-week period back here in December where Bitcoin went vertical and there was very little trading volume in that void. And so now we're at the 200. I think a break below 33 into this void, I don't think these lows right here are going to stop anything once the 200 breaks. That's, for a lot of technical traders and institutions, they key off the 200, and once you lose the 200, by definition, the overall trend is rolling over, going down. So you could see that thing fall all the way down to 23. So that's $10 out of 30. That's a significant drop. That's another 30%. So I think there's going to be a massive, massive gut check for the Bitcoiners. And we talked about Elon. What are these institutions? Bank of New York Mellon, JP Morgan, some of these other institutions that have, piled into Bitcoin up here. That was the big catalyst, right? Oh, now it's not just retail. All the institutions are getting on board and all that kind of stuff. Well, you got in at the top. You didn't get in down here at 10. You got in at the top. And so now, are all these institutions just going to hold on and say, well, it's not really that much of a big deal in the whole scope of things. We're in it for the long haul. Or do they bail out? We talked about Musk. He's got $1.5 billion on the balance sheet. Is he just going to say, okay, well, we lost 50% on our now that $1.5 billion is $750 million. So we'll take that hit on next earnings. And I'm not so sure about that. So I think and a lot of retail up here. There's a lot of people that came in late, came in at 45 and 50 and 55,000. This thing's going to 100K, and now they're all feeling the heat. Do all those people bail out? Here's this MicroStrategy, Michael Taylor. He's got a ton. They went out and borrowed money and put it into Bitcoin, and now MicroStrategy is back at the 200. It's basically a Bitcoin proxy. Massive void here below. Loses the 200 here at 475. I think there's a real good chance it comes into 275, $200 lower on this. There is an option chain on it. You may want to take a look at that if you don't want to get involved directly with Bitcoin. You can either play it, kind of like through Tesla. This MicroStrategy. You've also got Mara, MARA. You've got Riot. They're already, of course, down a lot, but with Bitcoin at the 200, if it loses that, it's going to go down some more. So big gut check for Bitcoin holders and the crypto space in general. One last comment on the sector. There's been a lot of speculation that Bitcoin flows have been pulling money away from gold. You've heard that comment, Bitcoin's the new digital gold. Well, gold's going up and Bitcoin's going down. So do those flows reverse, and do they pile into gold if they're exiting Bitcoin? That remains to be seen. One thing I wanted to point out to you, and this is a follow-up to discussions that we've had before. This is the US dollar daily chart. Down leg, kickback rally, down. Bad day yesterday for the dollar. Broke through this support layer. Now the next level, the super big level, is down here at 89.25. You break that, there's a lot of airspace below. Here's the monthly chart of the dollar. We had this relative high back here in 2017 of 102. We came down to this 89 level and found trendline support. Most recently, last year before COVID, we were up here around 100, and now we've rolled over, broken the uptrend line, and are back down near this support layer. You break 90, you break 89, you know, it's hard to get that resolution here, but you break 89, then you're looking at 80 and potentially 72 on the downside. And I wanted to point out the relationship between the dollar and commodities. This was back in early 2000. This big fall in the dollar coincided with the 10-year bull run in commodities from like 99 to 2008. And then once it bottomed out and started on an upswing, that's when we've had a 10-year bear market in commodities. That's not a coincidence. A rising dollar is bearish commodities. But now we're rolling over, so you get a big break in the dollar, and I don't want to get overly dramatic, but a free fall in the dollar. And I just noticed here that might not even be on the screen because of the width of my chart. Let me see if I can fix that real quick. It's going to mess everything up. Oh, not so bad. Anyways, here's that monthly chart again. Sorry about that. Monthly chart coming down here, testing the prior lows. My point is, we're bullish commodities, right? For a whole bunch of reasons: inflation, supply shock, new demand coming in. You get the dollar rolling downhill. That's going to be fuel to the fire and could open up a 5-year run, 2-year run, 3-year run in commodities as this rolls over. So keep an eye on it. Homebuilders, rising wedge, break, came down and tested the 50, bear flag action, now back at the 50. You break the 50 today, and then you're on the downhill side and pointing towards 67 and maybe 64, and then the 200 very much extended. So that would be a short idea for you. Then you can stay short against the 50 and trade this basket of home builders down towards 67 as a first stop and 64 for a second stop. I've been really interested in looking at semis. We've been tracking this the whole way. Whether you're trading it or not, it's very much a risk-on, risk-off sector. There was an article in Bloomberg, I think it was yesterday, that the semiconductor lead time now is approximately 17 weeks. You order something today, you got to wait 17 weeks, almost, a third of a year to get your product. And that is, and it's expanding every week. It's getting longer. So massive shortage there. We had the double top. We had the bearish divergence. We measured from the double top to the low, 16%. We break 215. That double top gets triggered down below the 200. But as it stands now, we took a leg down. We cut through that 227 support layer. It was an undercut, false breakdown, bear flag action, And today we're going to see a break of that flag. I think you can stay short against 227. Here's the measured move of the bear flag, and it points down to 205. We don't have to get totally crazy there. Just call it the 200 would be the test at 214. So we've got a support layer at 214, but from 227 to 214, that's a good trade in itself. And then we can take it from there to see if there's further downside, or if it's just a back test of this prior low. ICE, big trading range, $8 trading range from 110 to 118. False breakout, move back into the range. Your automatic target is the bottom of the range, and we're there now. You break 110 into this void, I think you can find 102, 100 on the downside of this measured move, $8 measured move. I like that short, even though the 200 is here. I don't think it's going to stop it. Why? It might slow it down, but you've got a big void here, and I think there will be a ton of sellers from all this trading range where they said, you know what, we got to get out, it's broken. And I think you get a lot of these sellers, or a lot of these longs here, that realize that they're trapped, just like these guys realized that they were trapped up here on this false breakout. That generated a lot of this selling pressure, and now all the moving averages have turned down and are heading lower. So I like that setup short on ICE. Okay, let's zoom back out to the indexes. Remember the setup. I'm not going to go through the daily charts, but I'll recap it. If you've been around for a while, you know this. SPY is on a sell signal. The Qs are on a sell signal. IWM is teetering, and maybe today triggers that daily sell signal. So our base case, the thing that we have been saying since that trigger, was a lower high that failed. And yesterday it looked like we got that. This was our leg down, came right down to the 50 EMA on the daily, found support there, and then we get this rally that finds trendline resistance, tried to fill this gap, didn't quite make it, came back down, tested this gap below at 413 just the other day, got another bounce, another lower high, and then at the end of yesterday really rolled over hard into this gap area. And now pre-market, I've got boxed in this kind of opening range. Who knows where we open at 9:30, 3 hours from now. Could be anywhere. But lower high. Now the thing we got to watch is, do we put in a lower low? Do we break this prior low? And if we do, that should usher in more selling. That's always a sell signal when you break a low. That's a sell signal. Just like when you break out from a high, that's a buy signal. So we're doing everything in reverse now, that we seem to be, rolling down the other side of the mountain. Lower highs, lower lows. Do we put in another lower low in the days ahead? That's what we'll be watching. Notice that we have this open gap from 407 to 405 that needs to be filled. And also remember that now there'll be a big gap above on the morning open. I'm assuming that we don't, rally all the way up before the pre-market. So we'll have a big gap above on that open. And that's always a tricky situation when you open in the middle of a range and you've got a gap below and then a big gap above. Which way do they break it first? So that might be a little tricky. And also notice that when we came down to this prior low, the 50 was at 405. Well, in the intervening days, the 50 has risen and now it's at 407. So this the 50 EMA support is now up at the top of the gap. So that will become a very, very important location, because then if this gap fills, we will be on the wrong side of the 50, right? We will have lost the 50 EMA support. And that's always an important technical event, because if you go back in time, the 50 has been a very good level of support where the buyers typically have stepped in, going way back. So you lose the 50 on SPY, that would be important. And one last thing for you active traders. First thing I always do most days, if there's, volatility in the pre-market, mark your overnight low and mark your overnight high. So yesterday, the high will probably be yesterday's close, right? Here at 412. And go in pre-market and find your pre-market low. Why? Because no matter what they do, if they try to rip it pre-market, once the regular session opens, very common that they go back down and test that pre-market low just as a double check. So always have that level, handy for your active trading. So let's pick up the pace here. SPY 30-minute chart. This 1050 and 1150 were really important back here as a key level of support. We broke out above it. Now we're going to gap below it. So going back up, there will be a gap here, but this layer will now act as resistance again on the way back up. Here's our gap below. We're going to open somewhere, 408, 409, whatever. So there'll be a big gap above, and then we'll have this gap below. So keep those levels handy. Qs. We had this perfectly mapped out, guys. You know that if you're actively trading. We said, first of all, 324 was important as a pivot level. And then when we broke that the other day, we came down, that ushered in some selling. And then we said on the way back up, 327 was going to be resistance, right? We had those pivots in there yesterday. Support, broken support. So that becomes resistance. We had tagged it once the other day, fell back, tagged it again yesterday and fell back, and now we gap down. So we'll have a gap above, and we have got a big gap below down here that's really even off the chart. A big $7 gap from 307 down to 300. So make sure you have that on your chart. But what's in the crosshairs today is the prior lows down at 318. We'll drill down. Let's look. Here is the 30-minute chart. We had the prior lows at 317. You break 317 today, you'll probably get more selling as we break that prior low, just like we already discussed. Here was, remember, support, resistance, 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 resistance. That worked as a great line. I hope you caught that. It took a lot of patience yesterday, of a lot of time spent just below 327, but the Bulls had nothing. They ran out of power there at resistance. And remember, I want to go back to the 2-hour chart. Remember, here's the 50. The 2-hour 200 is the 50 on the daily. Now we're below the 50, gapping even lower this morning. So the 50 held as resistance level, and that's going to be an important technical level going forward for the Bulls to get back up there and reclaim that. So sell signals firmly in place on the Qs. Again, here's a quick look at the Qs on the 30-minute chart. 317 is going to be an important level with gaps above and below. IWM, we said 223 was going to be resistance. It had given a breakout above this downtrend line yesterday. Had taken out the 50. That looks fake now, right? Because they could not hold it into the close. Closed back below this 220.50 and back below the 50 EMA on the daily. So now I think 218 is your pivot. We're gonna gap lower and have a gap above. There are no gaps below on IWM that got filled in here, right here on this day. That got filled. So we're going to open, in this 218, 217 area. We really got to capture this level here, 219 and then 220.50, and get back up above this trend line. I don't think that's going to happen today, but that'll be a longer term objective. And then remember your prior low down at 212. You break 212, then you got 209 in the crosshairs, which was support way back when. Here's the 30-minute chart. Here's the resistance. Here was the fake breakout. Came back, lost this 221.50, lost this trend line, and now we're back in this here. I guess there is a gap. I missed that on the 2-hour chart. I have a gap here from 217 down to 215.50. Looks like it right here. So anyways, you can use this 218, I think, as a toggle, depending on where we open this morning. Let's take a break here. I want to thank any new listeners and viewers for spending some time with me today. I put a lot of effort in this pre-market prep to get you ready. Trust my levels, they work. You can see the reaction levels at all the levels that we said where price was likely to react. That'll set you up for a day where you can focus strictly on execution. I can't make the trades for you. You've got to hone your skills on your execution around levels. But if you take half of the equation off the table, that is finding the right levels, that makes your job that much easier. And that's what I hope to do for you. Hit the subscribe button, hit the alarm bell, watch these videos when I put them out. Go over in the show notes, join our community. There's a place there where you can sign up for all my content. You'll get an invite to the trading room. We've got a nice cadre of girls and guys working hard to improve their trading. We'd love to have you join us. And of course, longtime viewers, give me a leg up by passing the link along to Twitter, a Facebook group, whatever. others in your trading circle. Ask them to join the group and benefit from the work. I'd really appreciate that. And of course, give me a thumbs up and a positive comment in the comment section. Okay, Facebook. Could not fill the upper gap. Sold off into the close. Gap below. Off the daily chart, 305 is the important level. We've broken above that. Any break below, we go down and fill the gap today, let's say. Any break below 305, then I think we come down and again test the 50, which coincides with this prior low down at 298. You break 298, whether it's today, tomorrow, next week, whenever, that will usher in more selling and move us into the lower 290 range. Apple, we had all these levels nailed. 126.50. We said we had this gap above, could not fill it, then sold away hard. At the end of the day, we've got an existing gap below. You can see from about 124.25 down to 122.75 at these prior lows. We're going to gap down today, so there'll be gaps above and below. Bulls do not want to see this prior low exceeded, then that opens the door. I want to show you the daily chart because we did have a head fake on Apple. Here's your uptrend line. Here was the head fake the other day. Broke above, could not break above the declining 50 and 20, and now a break back below 124 will put Apple daily back on a sell signal and open the door for a test of the 200 down at 119. So watch that really carefully if you're trading Apple. And if you've been long and strong, that would be your exit point on a daily sell signal, and I'm sure that will come today. Tesla, haven't even been looking at the 60-minute chart lately. I've been focusing on the daily chart. Why? Because we're teetering here on the 200 and this level here at 560, plus the whole Bitcoin saga thing. Does Elon hold his crypto if the 200 breaks on the Bitcoin chart? And what does that do to Tesla? I think if you break 560, you're coming down to 500 almost immediately. And I think that it'll actually find 460 down here where you've got some volume over price support. So that would be a compelling short if you can get, I don't know where it's going to open this morning, of course, but I think it's going to open below 560. If you're actively trading it, I would have the shorter time frames up because you may get a little kickback rally up to 560, and the closer you can get to 560, the better off you're going to be. If we gap down here to 525 or something, then you got a big gap above, and then it's a much harder trade to take. So, but regardless of the open and all that stuff, I think anything below 560 is a short, and I'd be looking for $100 lower. Microsoft, really weak price action again. Here's where the break was last week. We've got a channel of lower highs and lower lows. Came down to 239, and then they gapped it up and went back up to the top of the channel where it was rejected. Gap down the other day, and now we've been oscillating in and around this 245, which is a massive pivot level on the daily chart. And so we filled this gap, and now we're going to gap down this morning. and I looked pre-market, we were in the 240 area. So there'll be a gap above, and then the balance of this gap below, and then we've even got another gap down here at 239 that goes way back in the chart. So make sure you have that marked from 238 to 236. And so just using the channel as a guide, you know, we could come down in here to the 235 or 233 area. Let's look at the daily really quick because that's where we had it marked out. So again, false breakdown, break back above. Today we break back below, putting Microsoft back on a daily sell signal. And I think this time around, coming into 230, which was a big level from way back when, where we broke out, came back and spent a lot of time back testing 230, and then we launched, and now back on a sell signal, making all of this look like a false breakout. All these people up here that bought are going to realize, you know, now we've broken back below 245 for the second time. I'm wrong, get out, and then a move down towards 230. But regardless, Microsoft is a short below 245. Just make it just that simple. Amazon yesterday, free 50 club every day it delivers. Here we had a gap up, came up to 3,300 and then failed. Didn't even really give you a, you know, oh my God, fake move. Had one candle stick up above, and then once it rolled over, that was your sell signal back into the range, came all the way back down. And of course, now we're down towards 3,200 on the hourly chart. So we'll have a big gap above. We've got a gap below. I would be using 3,200 as your pivot. It's been working great. I mean, what can I say? If you've been an active trader in Amazon and you are sharp on your execution and the money doesn't scare you, what do I mean by that? You know, buying that weekly option that's going to cost you, you know, $1,500 or whatever, maybe even more. But these $50 increments have been working like a champ. So just a quick look at the Amazon daily. Remember, we've got the 200 right here at 3,100. This looks like a bear flag, right? Impulsive move down, reflex rally. That's your flag. Gap down today. I think that puts us set up for a test of 2950. You can just kind of imagine this leg here added on to this leg here, puts us down towards 2950, and then that's the super big test. So we'll have a test at 3,100 at the 200 EMA, and then a test at the bottom of the range at 2950. Moving on to Google, 2,300 we said was resistance, couldn't break above, couldn't hold it, back down here below 2270. So today we're going to come down to the bottom of the box and test 2240. There's a gap there, although I don't really have it drawn particularly accurate because we know we're going to gap down in the morning and you know, open probably down here around 2240. So I would be using that as your pivot with a gap above and a gap below. Google, last man standing on the daily, held the 50, held uptrend line support. Now the uptrend is a little higher after this rally. I'd still key off of the 50 at 2,200. You break the 50, then we're on the wrong side of the uptrend line and the 50 EMA. That means that opens up the door down towards 2,100 for a support test. Netflix. I mean, look at this action. We had this ranged box in yesterday, and we went from we just been ping ponging right to these levels. Yesterday we got to 493 and it died, and then it came back right into the close. So now today we've got this 485. I'm sure it's going to gap below that, but this is the range. I'm going to show you the daily chart to put everything in perspective. Your big level on Netflix is 470. This is a $90 trading range. So you break 470, the measured move target will be 380, right? 90 from 470 is 380. So that would be your measured move target. And if you go back in the chart, not a ton of trading in this area where there was a quick ramp up. So anyways, that would definitely put that on the wrong side of the chart. Even now, below all the moving averages that are all rolling over and heading south. So Netflix has a ton of work to do on the technical side to get back above the 200, back on the right side of the moving averages. So right now, definitely a bearish posture. So let's wrap it up here quick. Gut check on crypto, right at the 200 average. What do all the bulls do if and when that breaks, including Tesla, including MicroStrategy? Do they bail out or do they hold strong? US dollar crashing, that's going to be supportive of commodities. Home builders look weak. I gave you a level for short. SMH looks weak, heading lower out of a bear flag. That looks like a short. ICE, I gave you a level on that for short. And then sell signals on SPY, QQQ, probably IWM today. Gapping lower, gaps above and below in most instances. Mark those pre-market lows on your active trading chart, because better than even chance that we revisit those during the regular session, just as a double check. And then finally, watch the prior lows for fresh sell signals. If we break those today, that would probably usher in more selling. So anyways, I hope all that stuff helped. Longer video. I hope it was worth it. This has been Chris Buss with Traders Profit Compass. Talk to you next.